Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis on Wednesday, December 3, 2014. Daily chart of the SPY, and guess what? The band plays on. We're still in an uptrend in the market. We're still in the market can't go down bullish mode according to the talking heads. And there's two things going on. Number one is, what this is telling you is the market is going to go higher. It's going to go higher into the end of the year, and it's going to go higher into January, but we're still going to have a pullback. And I know it doesn't feel that way, and I know it certainly doesn't look that way. And it may even be for almost or as little as 1 to 3 days, but it's going to be a scare the hell out of you pullback when it happens, or at least based on what's happening now. In other words, the market grinds higher every day, and we're probably going to get one of those, 250, 300 point Dow down days. 20 to 30 point S&P down days, maybe a follow through day, and then that may be it. And it may just come into, this pivot here, which is let's call it 201.80, 202. We may not even get below that at this point. As we continue to move higher and the moving averages move higher, the likelihood of getting down to this area gets less and less likely, okay? So, but we will see a pullback, and it most likely will happen sometime between now and, mid next week type of scenario. Maybe, somewhere between now and a week from now. Whoops, sorry about that. And, expect it's going to happen. But I'm not suggesting, and I'm getting a lot of emails, hey, when do we short the market? We don't short the market because we're not going to predict a 1 to 3 day pullback and then put out a trade alert for a short. Now, we may short, and we are going to short. We are shorting a couple of stocks for the subscribers. But all in all, I'm looking to buy the market when it does pull back for the rally into the end of the year and into January. It's a much more predictable play based on seasonality. And, if the market's going to pull back for 1 day, that's one thing. If the market's going to pull back for 3 days, that's something else. And we just don't know which one it's going to be. So if you're short, right, and the market pulls back and you're still holding a short position and we have one of those snapbacks the next day, you get it in the face and it made no sense to short in the first place. So, I'd rather go with the higher probability trade, which is wait for the pullback and then buy into for the rally into the end of the year. And that's the way I'm playing it. That's the way the subscribers are going to play it. And that's the way I suggest anybody plays it. It's the safer play. And remember, this isn't a, casino business, although a lot of people treat it that way. This is a, you play the stocks or the indexes on whether it's the long or the short side when the probabilities are in your favor, and the probabilities will be in our favor to play the long side, alongside when the market does pull back. So there you have it. So the S&P was up only about 0.33% today, but again, the IWM, which has been really strong of late, okay, the IWM was up another 1% today. Let me just double check that. Yeah, it was up exactly 1%, and 1.16 in dollars and cents, or 1%. And you can see where this thing, and if you go to a longer term chart, okay, you'll see that, this is basically making a bullish pattern here. And even if we come down into this area as low as 110, in that neighborhood of 110, this would still remain in a bullish camp. So, I think that that the IWM may even be something that we'll want to play on the long side once we get this pullback, because once we get a rally into the end of the year and everybody becomes bullish for the Santa Claus rally and all that stuff, they'll start to buy the riskier assets, the NASDAQ and the IWM, and you'll see exponentially more gain out of the IWM and or the NASDAQ than you will out of the S&P and the Dow. So that's my take on it, and I expect that to take place. All right, let's move over to the oil market. This is the USO, and, well, that's the weekly chart. How ugly is that, right? Let's go to the daily chart. And, you're still not getting off the mat in the oil market, okay? Crude, the price of crude futures today, right now is at 67.64. And, until we recapture into the 70s, this is going to remain relatively weak. However, we may be carving out a bottom, or this may be a bearish pattern. There's really no way to tell yet, and that's why I've stayed away from it. Again, we want the probabilities in our favor. We don't want to just take a flyer and say, well, it should be at a low, so let's buy it. Or it should go down, therefore let's sell it. What we think should happen doesn't necessarily have to happen. We want to see evidence that we're making a low. And even though this was a high volume, could be considered a reversal day, we never had any follow-through. So until we see some follow-through up above this area, we're going to remain cautious and remain on the sidelines in the oil market. And if the oil price does go lower, you're going to see the energy sector come down with it. And by the way, what's going to scare the market right now? Who knows? But here's one scenario that could play out. So you have a lot of hedge funds that are struggling for 2014, okay? They're down for the year, or they're only up slightly for the year, and a lot of them were loaded in energy. And by the way, there's energy-specific hedge funds that are absolutely getting taken out behind the woodshed, or have gotten taken out behind the woodshed with all the pressure on the energy stocks. So what you're probably going to see, and we do see this from time to time, you'll see a failure of a hedge fund or two. And what'll happen is, and this is the way the media plays it, you'll have a big down day, okay? And whether there's a failure or not, well, hear me out. You'll have a big down day or two, and then at the end of the day or the following day, you'll see someone like Bob Pisani always does this. He'll come on TV from the floor of the New York Stock Exchange, and he'll say that he heard a rumor that a hedge fund was failing and had to sell most of their holdings or a lot of their holdings into the market, and that caused the market to scale down. It always happens that way, and then they never have any evidence of the fund that failed, and then it goes away and everybody forgets that anybody said it. So I expect that to happen again. So why would a hedge fund fail just because they owned energy stocks? Well, because you have to understand that hedge funds play with leverage. And what that means is they may have, let's just say, we'll use easy numbers. Okay, if they have $1 billion under management, they may be trading $20 or $25 billion worth of equities, okay, at any given time. So a 10% loss when you're leveraged 20 to 1 will basically wipe you out. So, yeah, they have some short, some long, they have some other stuff other than energy, but the point is that when you're leveraged that much and the market goes against you, that's a recipe for disaster, and there will be a failure, whether it's real or fake, a rumor or not, who knows, but you'll hear about a hedge fund failure at some point. My guess is in the next week, and it will circle around the energy sector. So we'll see what happens, and if it happens, I'll come back and tell you that, see, I told you it happened. Now, not that I want to say I told you so. This is a very humbling business, so I am humble. I'm just kidding around with that. But we're going to look for that, and you won't be surprised if you hear that from the media, and you'll have heard it here first. Okay, let's go over to the gold market and GLD. A good day for GLD. Let me see. GLD was, what was the price of GLD? Okay, so GLD was up 87 cents today, 0.75%. All right, and the gold market is bullish. And you're going to have pullbacks. You're going to have whipsaws. You're going to have scare you out of the gold market. You're going to have a lot of volatility in the gold market, but there are higher prices ahead. Everybody has been very bearish as we got down to this level here, okay? And they've remained bearish even as we moved off the low. Okay, so expect more upside in gold, but also expect some volatility. And I'm going to put out a note to the subscribers tonight, what to look for in the gold market in terms of, we must stay above this price in spot gold in order to remain bullish. And that'll give you something to trade against if you want to buy gold or any gold-related stocks. GDX is a basket of gold mining stocks. GDX. Basket of gold mining stocks. Again, bullish, although we had a weird scenario today. You see this big, what's this called, a wick. You see this big tail here that goes all the way down to 1771, I think it is. That happened in the last minute of the day today. That's what we call a fake print. It's sometimes it means something and sometimes it doesn't. As it relates to gold, I think there's higher prices in gold. Therefore, I think there's higher prices in the gold mining stocks. However, you have to be aware that this happened because sometimes when these things happen, they actually play out and you'll find the gold mining stocks down at this level at some point in the near term. And why does this happen? Well, I think the institutions play games, and I'm not really sure how they pull this off, but nevertheless, it does happen, and it's something to be aware of. It's something to look at. It may or may not play out that way, but it's just something you want to know about. However, I like the gold mining stocks up into this area here until we really have any kind of a meaningful pullback. So call it 21 to 21 and a half, and then we'll see what the chart pattern presents itself at that point, whether it sells off or whether it puts in a sideways move for a few days, several days, couple of weeks, whatever it is, and then that would basically poise the market for another up move. So that's my take on the gold market. Anything else tonight? I don't think so. I think I covered everything I meant to. Just be aware that over the next week, you're probably going to see a scare the heck out of you decline in the stock market. That's going to question, is the market going higher or are we pulling back and have a real correction again? But my take is that we'll be a short-term pullback and then we'll rally into the end of the year. We'll see how that plays out. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.